So, in order to understand where we're going, we need to understand where we were first. So, I put together an official thread here for ENZC. Let's go ahead and get that started now. What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with an ENZC technicals, raw price action, and statistical thread of analysis on this Thursday. Before we get started, please make sure to subscribe to the channel, like the video, and share the video with a friend so that you and them could consider joining our trading community in Discord called ARCa Bulls. With that said, let's dive right into the charts. Okay, so you guys, real quick, as I do see there's a large community behind ENZC. I had really no idea, right? I had never even heard of the ticker, right, until Kristen, asked me to take a look at it. So thank you, Kristen, again for for requesting it, right? So I put together something kind of special here, but I would actually like to just express who I am real quick to everyone, right? So guys, you should definitely know that I am more of a short-term based trader, right? So I am in part algorithmic, right? So I develop code for indicators and stuff so that we can gain an edge over the trade, right? I'm systematic, and I usually don't practice based on fundamental metrics, right? So I practice fundamentals in a very particular manner, right? So only things like share buybacks, management changes, acquisitions, mergers, partnerships, more along the lines of things like that, not even earnings, right? So I just want to, pardon me, I just want to kind of put that out there. And also, you guys, you should know that I am both long and short bias, right? But since this company, of course, has a whole plan, then my bias towards this will be long only, right? Just like I do for GTII and just like I do for COSM and even AMC, right? So I can practice both sides, so because I'm ambidextrous like that, right? So I can show you how the bears can play it against us too. All right, so that's kind of like what I studied, from the get-go. I wanted to know how both of the offense and defense work in a play, right, for a true edge. But with that said, let's go ahead and really dive into this now, you guys. So I'm going to start off with a very advanced topic here. Okay, so this is pretty much as high, or I can take it further, right? But this is pretty high up there, right? So let's go ahead and just take a look at this now. So every single little gray box that you notice here, I've taken note of a certain criteria that happens within ENZC throughout the entire trading history of it. On the daily chart, right? So going back as far as, let's see, about 2009, right? So my first iteration, I'm going to give you the context behind it, by the way. So my first iteration was in September 2009. So what is the context behind this backtest, right? So yeah, let's go ahead and figure that out first. Anytime that volatility has contracted into a critical expansion zone, critical contraction zone, which I can consider to be anything within the 15 percentile or the 10 percentile, right down here, and started an expansion phase paired with stochastic momentum making an upside pivot here. I've taken note of every single iteration where that has happened, historically speaking, right? So now exactly what did I take note of? So just so I can kind of like zoom in here, I can just go ahead and show you on literally any iteration, right? So for example, on this one here, as soon as we started getting that upside on the moving average and on the volatility component, please remember that if you don't know this just yet, right, that volatility is actually direction neutral. So we pair this with stochastic momentum or a momentum-based indicator to give us that bias for direction, right? So from the opening of this candle here to the high of the range is what I take a measurement of, right? So you can see if I hover over this candle with my mouse like this, you can see on the O right over here that that's the opening, right? So opening of this candle would be 7 cents and the high would be the H, right? So hovering over this candle here would be 98.88, right? So right about there, right? So I'm really critical with this. I'm very, very detailed. What I do want you to know is that data fluctuates, right? So first of all, this is a statistical backtest, and you can see here that we had a downside first before it actually met its top side. A lot of those fluctuations people don't understand, but the data speaks what it does, right? And that's just how I trade. I really trade based on data. I don't trade based on really anything else. So yeah, just so I can give you that context, right? So the highest move that it made during this up run was to this point here. So that's why I take the opening to the highest range, to the highest point of the range, regardless if the stochastic momentum continued to the upside here, because it started guessing the upside incorrectly from this point on. As you can see, the candle started coming down while this is still going up. There was a bit of a divergence there. Okay, so I did that throughout the entire trading history on the daily chart, right? So this is just one time frame. My edge really comes in when I do it to several time frames and also measure the downside paired with volatility as well. Okay, so in this case, we've only done one. Okay, so I want to go ahead and give you that the metrics based on, so these are all the samples, right? I'm going to give you the data set now. So I also measured the amount of times that that volatility versus momentum guessed that upside correctly based on the green lines versus incorrectly too. Okay, so just to further our edge. Okay, so out of a total 38 iterations throughout the entire trading history of the daily chart on the ENZC asset, you're looking at 30 guessed correctly to the upside. This gives us an average upside accuracy of 78.95% with an average upside thrust of 131.55% over the span of about 11 and just under 11.30 days, right? So just over 11 and a quarter days, sorry. So now this is the proof of work right over here. Now we do have an average upside thrust of 131.55% with a standard deviation of 515%, almost 516, right? If you're familiar with statistics, you'll know what I'm talking about here. But if you're not, this is a little too difficult to explain in a short video. Right. So now I calculated the first standard deviation as well. So we do have an upper bound of 647%. And an unusable lower bound of minus 384%. So pretty much constitutes as zero, right? So what this means is that I am calculating where 68% of the results land. So if you are, let's see, if you're familiar with math, then you'll know what I'm drawing here, right? So you're looking at a bell curve like this, right? So let's just go ahead and take that into account. Just sort of freehanding this, right? It came out pretty good. Okay, so now we draw your vertical line right at the center, right? So, and this would be the the lower bound border, and this would be the upper bound border, right? So I'm just going to kind of draw it in here for you so that you understand what I'm talking about. So the mean is 131.55% with a standard deviation of 515.768%. So 68% of the results land within 515%, right? So just like this, right? So just for the sake of time, we're just going to leave it at 515% land within these results here. So now the lower bound is unusable, right? So we'll put that at 0%. It is an unusable value. And the top side, the upper bound of the range would be 647% to the upside, right? So this is essentially the criteria that we're looking for based on the volatility versus momentum profile. Okay, so now we see where 68% of the results land, which is within this area, and now we see a lower bound and we see an upper bound. So what I'm trying to say here is that we have based on the backtest, we have a pretty much 80% chance that we can make an average move of 131% to the upside over the span of 11 days, like from the firing of the signal, right? So when does that signal fire? So if we're looking at this from the contraction to expansion, we want to wait for volatility and the moving average to be pivoted towards the upside beyond the minimum 10 percentile. And it would be ideal to be beyond the 15 percentile, which is this green line here, with an upside pivot paired with stochastic momentum with an upside pivot too, right? So that would be the context. That's the entire criteria there. So now if we look at our current position this is what we have done. This is where the signal fired, right? So right here, I'm going to go ahead and draw that line so that we're all in the same page, right? So right here, and we're going to draw it green because it's obviously making the move, right? So this is where it opened. We have an upside pivot on stochastic momentum, and this is where we have the upside pivot beyond the 15% of volatility, right? So measuring from this point to this point here where we're starting to get our first red candle, please notice that we've already made 147.95% to the upside. How long has it been? Well, take a look right down here. From this candle to the current candle where we are, it's been 14 days. In our statistical metric, our data set actually came back with telling us that we would make an average move of 131.55% over the span of 11 and a quarter days. So not bad at all. 14 days, 147% to the upside. We've technically matured this signal. Okay, so what does that mean? It doesn't mean, what I can tell you it doesn't mean is it's that it's not the end of the world, right? So in fact, it's just part of the natural ebb and flow of things, right? So what we are looking at here, however, is still a pitch to the upside on stochastic. There's a little bit of weakness coming in, but we already kind of saw that yesterday, right? We already saw a little bit of weakness coming in. I put a very discretionary guess saying that we could reach maybe the 15-cent area before a pullback. In fact, we reached around 13.20. And remember, guys, that also I have my edge really when I do my systems trading, right? Like this stuff here. So now if we start getting weakness on the stochastic momentum to where it starts pivoting to the downside paired with volatility up here, that would be then a statistical move to the downside. So that would be a bear move or a bear stats play or a bear volatility play, right? So I just want to be as clear as I can with you guys so that I'm not looked at like as some kind of pumper or some kind of whatever, because I really don't care about anything other than what the data says. So, and it's displayed to us. It's public, right? So in fact, both of these indicators are free. So yeah, BBWP representing volatility and StochMo representing stochastic momentum, all within the TradingView platform. So let's go ahead and move on to the next chart and take a look at what we have here. Okay, so now on the daily chart, I do have some critical areas to kind of look out for. If we were, I'm not saying that we're going down here, right? So if we were to penetrate this area that I call the invalidation zone, this would essentially present a continuation to the downside. What I do like, however, is that, you know, that this indicator here, this is my indicator, the ARCa, as in ARC averages, right? So I'm able to manipulate and add literally whatever kind of moving average I want into this. I coded it myself, right? So please notice here that we have the golden cross happening on the daily, which is usually a bullish signal. The golden cross consists of the SMA 50, simple moving average 50 period, or 50-day simple moving average, crosses the 200-day simple moving average. So when we get that cross, that is considered to be a very bullish signal, and it's usually market bull cycle, right? So let me just take out the EMAs, right? And so that you can see exactly what I mean. So this blue line here, or the teal line, is crossing above the SMA 200. That constitutes a golden cross. Now, we also have a silver cross, which is very curious. So that is exactly when the EMA 20 crosses the EMA 50. So you're getting a bullish cross every time you have a smaller time frame cross above the larger time frame. So we have both of them crossing, and we have upside pivots on both of the time frames. Okay, so that's very good for us to consider, right? So I'm just going to go ahead and add all of the 4 moving averages back and block them now that we know what's happening, right? So if there is a bottom side support here, right? In this is not saying that we're going down here. I'm just saying that this is still considered bull area, right? Just in case the price action were to come back, and it just so happens to have confluence with the 3.272 Fibonacci ratio, which is one of the few Fibonacci retracements or ratio that I keep an eye out for, right? So as you can see today, the price action, this is a daily candle, right? So today's price action came down to about 11.98. Now, if we just kind of zoom in here, you'll notice here that 11.98 has a lot to do with the not 618 1206. So this is a very important golden mean, or the golden ratio, right? So everything revolves around the 618, right? So we came back down to that not 618, bounced straight to the upside. And, I'm not sure if we're actually getting a little bit of exhaustion here, but usually when you start to get price action continuing to the upside, and then you see your volume profile continuing to the downside, this divergence usually suggests weakness to the bulls, and we could be set up for a short-term retracement to reaccumulate for more bulls and then continue on to the upside, right? So that we must look out for that when we are traders, right? So now I know that a lot of investors are within ENZC, okay, and I know that I'm kind of giving you the short-term perspective as well, but this is what I do. I tend to give you a kind of a forecast, right? So you can think of me as kind of a weatherman, right? So that's kind of like what I do for GTII and COSM, regardless of how upset some people can get when I say, well, there is downside to be looked out for. I'm actually just watching out for you. It's like you're gonna have a best friend, and this best friend feeds you lies instead of the truth when you're really asking for someone to be honest, right? So a secondary support that we can face here, you guys, let's just stop messing around there. And we could actually, take into consideration the current range low to range high of this last candle print. And you can see here that the one spot 618 is located at 1131. And I can see that 1131 being a zone for support too. Okay, so remember yesterday I was talking about that we could potentially be building this scenario here again. Well, yeah, that could be it here. So there is a range within this. Okay, so that range would consist of this top side of the candle here, which is the closure at about 11 cents. So 11 cents to 1131 could be a range for support, but we already know what we have down here. All right, and also the more obvious targets would be, of course, once again, the 2 spot 272. I'm going to draw them here for you, right? So that you can kind of gain an understanding over what could be happening, right? So just like this here to the wick highs of these candles here and the wick high of this candle, which has a lot to do with the wick low of this one here and the 2 spot 272 right over here. And wow, and the 2 spot 618. Nice. Okay, so yeah, let's go ahead and just draw this range here, and these are our ranges of support. Okay, we have a less likely one that can hold, right? But we have to note it down just in case we do. We have the more likely one, the higher probability support, and then we have our lowest end trend support before we have the invalidation zone. So starting to close candles below this area here would constitute a downside continuation. Okay, you guys, so be very clear about that. Okay, so now let's go ahead and move on here. And looking at this, again, on the daily time frame, we have a right-angled broadening ascending wedge. And this is a formation that can actually act as both bullish and bearish, right? So what you're looking at here is this is the 12-month chart. And this little circle here represents this circle right here, right? So that you can see kind of how the price action is moving thus far. So, yeah, and in this range right here, this little red box is this red box right over here, right? So this is that inflection zone that I'm talking about. And it also just happens to share a lot of confluence with the top side of our broadening descending wedge as support. So breaking the support right back here, right? This area here, the invalidation zone, which has a lot to do with this formation right over here. This would mean gathering the inside of the formation again, and we would continue to the downside. Breaking out of this formation did have a very positive thing. We broke out, we came back and validated the newly converted resistance into support before a continuation to the upside. So this was already a very important move. Now, we have a price objective for this. So take a trend line from the breakout area all the way to the lowest point of the wedge and apply it to the breakout area, and that gives you a top side of about 1968, of which is very close to the 2121 of the 2 spot 618 yet again. So the 2 spot 618 rhyming a lot in a lot of different ways. All right, so but yeah, remember that we do have several zones to look out for before we continue. Okay, you guys, so now the reason why I had this up here is because I wanted to show you just how just how this is one of the ARCa bulls the algorithm, right? So I want to show you here that this is an active resistance and support metric tool that actually takes into account live market data, right? So as the market moves, these resistances and supports, they all kind of move as well, like live, right? So what I wanted to point out here was something very curious, is that I did have the, I know you can't read it here, but we can just kind of hover over it, right? That's the monthly support. And we had a previous monthly support of 36.43, of which could be in line with these candles, right? Let me just block this. Right over here, right? So the low of this candle and the closing of this candle here, and also the wick high of this candle here. So huge confluence here within the substance resistance and support zones, right? So this, I designed this algorithm to kind of favor the more psychologically used supports and resistances, historically speaking, and so it can display that based on certain closing periods, right? So I don't have to dive into that. It's just for me to look at what the potentials could be within the shorter timeframes and the macro timeframes, right? So now the last part of the analysis, guys, I know this video's gone forever, right? So we do appear to have some downside coming in on the, let's see, the 30-minute immediate short term. The bi-hourly has some downside as well as the 6-hour, and now as we get into the 12-hour and daily, it looks like we have a limited support, a limited downside, sorry. So that downside could be in line with what we're talking about here, right? So potentially 1128 or the space between 966 and 1014, right? So, but please remember, this is right here, right? So this could allow another opportunity for longs to get in and just rocket ship this thing to the upside. And it looks like the bi-daily RSI, the 3-day RSI, and the 5-day RSI are still suggesting a continuation to the upside. And you can see, historically speaking, the 5-day can go up all the way up to 97%, of which right now it's at 81. Right, so yeah, we still have some space to go, but please remember, you guys, at any moment this can be invalidated, right? But now we know that we've already matured the upside and we're due for a little bit of a pullback before we can continue on to the upside. So I hope that I'm sorry that it's 22 minutes long, right? But I hope that you did listen all the way. And but yeah, that's entirely my thesis thus far. Okay, you guys, please remember first and foremost that I am not a financial advisor. Take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy or sell, hold any assets whatsoever. Okay, you guys, I need you to do your own due diligence and everything will be cool. But with that said, I wish you well, a very, very good night, and I will catch you at the bell. Mañana. Adios.